On July 30, 2023, hackers exploited a vulnerability in the Curve Finance protocol to steal over $70 million worth of cryptocurrency. The hacks were a major setback for the cryptocurrency community, raising serious questions about the legitimacy of decentralized finance protocols. Why did the hacks happen? What motivated the hackers? Who were they? Did the hackers really return the funds? In this episode, we will answer all your questions and more, diving into one of the most notorious crypto hacks in 2023. Curve Finance is a decentralized exchange, a platform that enables users to exchange stablecoins efficiently. Stablecoins are a type of cryptocurrency similar to a fiat currency like the US dollar. The protocol is popular amongst crypto investors because of its low fees and deep on-chain liquidity. Michael Egorov created the Curve protocol in March 2020. Egorov was inspired to create Curve after seeing the problems with other decentralized exchanges. DEXs at the time were often illiquid and expensive to use. The Curve was designed to address these problems by providing a liquid, efficient, cost-effective DEX. Curve introduced a new type of AMM called the Concentrated Liquidity AMM in 2021. Concentrated Liquidity AMMs are designed to provide more efficient trading for stablecoins with similar prices. Curve also introduced a new token called CRV in 2021, used to govern the protocol and earn fees. Curve launched two pools, Curve 3 CRV and Curve 4 CRV. These pools supported 3 and 4 stablecoins respectively. Curve partnered with several DeFi projects such as Yearn Finance and Convex Finance. These partnerships have helped to increase the liquidity and popularity of Curve. Curve was also audited by Trail of Bits and Open Zeppelin. These audits have found no major security vulnerabilities in the protocol, thus fortifying its legitimacy. Curve quickly became one of the most popular DEXs in the world. In its first year, Curve had over $1 billion in total value locked. By 2022, Curve had over $20 billion in TVL. This growth was due to many factors, including Curve's low fees, high liquidity, and efficient trading mechanisms. Curve has had significant impact on the DeFi ecosystem by being a major liquidity provider for a number of DeFi projects. Its accessibility to a wider range of users created a strong community of users and developers. However, despite its status and legitimacy, Curve fell victim to an exploit that cost them millions. In the months leading up to the hack, there had been many high-profile DeFi hacks, including the Poly Network hack and the Badger DAO hack. These hacks raised concerns about the security of DeFi protocols, and they made it clear that even the most popular protocols were not immune to cyber hostilities. A series of Curve exploits happened on July 30, 2023 between 1310 and 2200 UTC, and the first one was first noticed by the security company PeckShield. The hackers exploited a vulnerability in the Viper compiler in version 0.2.15 to 0.30, and as a result, the following pools were hacked: Curve/ETH, ALETH/ETH, MSETH/ETH, PETH/ETH. The hack was made possible because of something called re-entrancy. Re-entrancy in crypto is a common bug that tricks a smart contract into being in a loop of software commands. This allows them to steal assets. The attack was traced to a faulty code on Viper, a programming language used to power parts of the Curve system. Curve Finance was exploited for approximately $62 million, and the total amount of funds stolen was around $74 million. The Curve team identified and fixed the vulnerability within hours of the exploit. The Curve exploit gravely affected its TVL, plummeting its value to 50% on the same day. The CRV token also took a hit, traded at 50-cent levels after the hack. Confidence in the DeFi protocols was shattered because its high legitimacy and security rating came into question. The exploit also cascaded down to another issue faced by Curve's founder, Michael Egorov, putting his collateral at risk of automatic liquidation by AV. The declining price of Curve might push it below the liquidation threshold. When traders caught wind of the exploit, many began to dump their Curve holdings. Bankless tweeted, quote, "Centralized exchanges show Curve price only bottoming out at $0.583, but the token managed to hit lows of 0.109 on-chain. After the Curve/ETH pool was hacked, on-chain CRV liquidity became extremely thin, leading to on-chain price volatility. If the liquidation were to push through, it would spell disaster for the whole crypto ecosystem. The team immediately worked with exchanges to recover the stolen funds. These exchanges occurred on the decentralized communication on Ethereum. The deployers of the affected protocols posted, "We are offering a 10% bounty of any funds stolen, which are yours to keep if you return the remaining 90%. A user with the public tag Curve Exploiter agreed to return the funds, but not before using some very colorful language. From the 73.5 million worth of assets stolen, 73% have been returned so far. The remaining funds were almost 100% stolen in the Curve ETH pool. None of the stolen funds from the fund pool have been returned so far. The Curve exploit case is still roughly investigated by several Ethereum core developers and on-chain investigators. The damage was quickly assessed and mitigated. The Curve exploit taught us a number of lessons about the security of DeFi protocols. First, a higher level of security does not equate to immunity. Second, it showed that DeFi protocols must be more vigilant about patching vulnerabilities. Third, it showed that the crypto community can help mitigate the damage caused by hacks and exploits. Finally, it showed that DeFi protocols must be more proactive in working with law enforcement to investigate and prosecute hacks. The Curve exploit was a significant event for the DeFi ecosystem. It showed that even the most popular DeFi protocols are not impenetrable from illicit cyber activities. The case reiterates the significance of security audits and bug bounty programs. Steps are underway to improve the security of the protocol. The bounty is now open for retrieving the remaining funds with a $1.8 million reward in the pursuit of speedy justice. Curve's exploit was a major setback for the cryptocurrency community, but was not entirely unexpected. It also taught us several important lessons. The Curve team is committed to providing a safe and secure platform for users to trade and swap assets. In the ever-volatile world of crypto, a higher vigilance is necessary. Key players and developers in the industry need to collaborate with law enforcement to investigate and prosecute hacks. Only then can we create a safer and more secure DeFi system.